Welcome to OUTPERFORM, a limited podcast series from the founding partners and development team of Crypto Access Fund. In episode 3, we examine one of the most common critiques of digital asset markets, that crypto is purely speculative. Speculation is often treated as a verdict, a reason to dismiss an entire market. But for those operating inside fast-moving systems, the real question isn't whether speculation exists, it's whether it's understood. In this episode, managing partners Al Weiss, Max Hooper, and Candice Nelms unpack that assumption and explain why speculation itself isn't the problem. This episode begins with Candice Nelms, lead trade strategist at Crypto Access Fund, addressing the question directly. If crypto is speculative, how do you operate responsibly inside that reality?
Speculation happens when people fall in love with a story and they ignore the transition. Our job is to notice this transition early and adjust our exposure. But also it's fair to say that some people believe crypto is speculative because they think the assets themselves are empty. And in the early days, a lot of that criticism is earned. When everything is framed around price and hype, it's very reasonable to assume there's no underlying substance. But what's changed is that digital assets have grown into infrastructure. And behind the narrative noise, there are systems with real usage, real settlement, real network activity. That doesn't mean every token has actual substance. Most don't. But in this market, opportunity doesn't always come from ideology or infrastructure. Sometimes it does come from just behavior or a collective attention. So a token doesn't need to change the world to create real tradable value.
A lot of times, people, just like when they invest in stocks, they say they have a long-term hold mentality, but in reality, they're buying and selling short-term, trading in and out. Generally, they're selling at the low and buying at the high. They have short time frames. They chase headlines. They use too much leverage. They have no planning associated with it. And because this market even moves faster than stocks and bonds, the crypto market, these behaviors get enhanced and are even worse for most people under that scenario. So I think the same behaviors that we see happening in stocks and bonds, if they're applied to crypto, it's going to have the same result. And so I think it's not about the speculation nature, it's about how most people are engaging with that particular asset.
Many investors assume volatility means speculation. Really, volatility just means prices are moving. Speculation is about how people respond to those moves. Most markets look speculative when participants really don't know why and what risks they're actually taking. In CAF, what happens is we really don't treat volatility as a signal to act. It's just another condition in the system that is built to operate.
The real risk isn't volatility, it's staying in the wrong framework for too long. Speculation is about misreading the phase of the market. There are digital assets that represent real infrastructure, systems that will reshape how value moves, settles, and scales. But our job isn't to pick sides, it's to understand which regime we're in and then design our exposure accordingly. Most people aren't reckless, they're just late. And then they apply the wrong logic to the wrong moment. So speculation starts to show up when people keep using Thursday's rules in a Friday market.
As markets transition, awareness alone isn't enough. Recognizing regimes is one thing. Operating consistently through them is another. In fast-moving systems, insight without structure quickly collapses under pressure. The volume of data increases, the speed of change accelerates, and human judgment, no matter how experienced, starts to fracture. At that point, speculation stops being a market problem, it becomes a design problem. The difference between reacting and operating comes down to whether decisions are made in the moment or governed in advance, whether information overwhelms or is filtered, tested, and aligned with a framework that holds when conditions change. This is where the Crypto Access Fund's edge emerges, not from prediction, not from conviction, but from building an agentic operating system designed to stress test information against governance and inform decisions before urgency ever enters the room.
Narratives feel compelling because they offer urgency and simplicity. CAF doesn't really do either. Our agentic AI operating system continually evaluates what matters against our governance framework. So narratives don't drive our behavior. If something doesn't fit the structure, it doesn't enter the system, no matter how popular it is.
It doesn't get attached to the narratives. It's constantly gathering the information we've already agreed matters and enforcing our governance so we don't drift when markets get noisy and chaotic. So we can see these regime changes forming instead of debating about them after the fact.
Speculation isn't baked into crypto. It's baked into poor design, poor decision-making, having too much margin, etc. Structure determines behavior, and behavior determines outcomes. Crypto Asset Fund is built to function without urgency, without emotion, and without needing to predict the next move. And that is our real edge in the marketplace.
Speculation isn't unique to crypto. It emerges wherever speed outpaces structure, where psychology overrides process and decisions are made under pressure instead of design. What separates outcomes isn't the market itself, but how participation is governed. In our next episode, we go inside that governance. We break down Folio, the agentic operating system behind Crypto Access Fund, and explore how it stress tests information against a defined framework to support disciplined, consistent decision-making in one of the fastest-moving markets in the world. Until then, stay curious, stay informed, and stay ahead.